Good afternoon, friends, and thank you for today's session. And we welcome every one of you on behalf of Portfolio Management Services of Prabhudas Lilladher. As we all are speaking today, probably our benchmark indices, that is Sensex and Nifty, is hitting all-time high. And there's a question that we get from most of the investors that what they should be doing in this kind of scenarios when the markets are at all-time high and the money are pouring in from financial institutional investors, as we are seeing that every day we are getting around figures to the plus of 2000, 2500 crore. And markets are not at all buzzing to correct. So what we offer at our portfolio management services at Prabhudas Lilladher are primarily two kind of offerings. One is our multi-cap, which is our flagship product. Our multi-cap scheme, that is a multi-strategy. Multi-strategy predominantly invests into all three categories of the market capitalization, that is large cap, mid cap, and small cap. But primarily multi-cap would have allocation towards large and mid-cap companies. So an investor who is willing to invest in companies with, I would say, moderate risk profile, not too aggressive or not too defensive, could always select for our multi-cap strategies. With the consistency of having a mid-cap to large-cap bias depending on the market scenario is something that we look up in our multi-cap strategy. Our second offerings is purely into small and mid, I would say small and mid-cap, which is slightly tilted more towards small cap. Obviously, the mid caps are also looked forward depending on how the market is perceived to be invested. In our small and mid cap offerings, we generally take the bottoms up approach. Companies or the more than a sector specific or a company specific approach. We look at the stocks where we believe are likely to outperform, which are structural long hold kind of investment philosophy. Normally what we have seen predominantly that the mid caps or a small caps generates good amount of wealth over the period of time, but they inherent have a high volatility. So an investors with minimum 5 years of time frame horizon looking for an investments of bare minimum of 5+ years should consider to investing into our small and mid cap strategy. Because in certain cycles when the markets are unfavorable, and we had just seen what happened post COVID in the month of February and March when the market tumbled, there was a lot of issues related to the volumes, liquidity, selections of stock in small and mid cap space. And a lot of companies, even during this time, last Jan Feb, and even earlier in Jan 2018, when ILFS crisis had happened. At the same time, the recapitalization, or I would say reclassification of the different kind of buckets in which one can invest. We had seen a huge amount of drawdown happening into small and mid cap space. So small and mid cap would definitely offer a promising future, but at the same time it has a lot of inherent volatility and risk associated to that. So we would suggest that investor who has having a minimum 5 years of time horizon, at the same time who's willing to take some higher risk in the market to generate, should look at our small and mid cap offerings. Our PMS would mainly backed by a strong research of offered by institutional research of Prabhudas Lilladher. At the same time, we do also rely on certain external research where we have our broking tie-ups. Based on that, the investment decisions are taken. So there is a very rigorous monitoring of each and every company that we have in the portfolio to be looked upon. Normally we avoid or the refrain from I would say a regular churning, if the word to be precisely used, in our portfolio. So we are a long only PMSs. We take investments calls in companies or the stocks for at least time horizon of 3+ years. And before selecting in any companies or any stock, there is a detailed analysis and the research done by our team that has been considered, and based on the recommendations, then the investment decisions are taken. What helps in the portfolio? See, normally, most of the time, the kind of market that we have seen from April till now, lot of investors believe that they themselves also, by investing in capital market or holding on to some companies, have made the decent growth. Then why do they need professionals? Friends, you always need professionals in the market scenario, whether it's bull or the bear, because there are certain discipline that professional brings to the portfolio management services. What are these disciplines? Let me explain you. First and foremost, professionals would never have a bias towards any sector or any stocks. They would purely buy the companies based on the merits those companies offers. Second thing, professional would always, because they are full-time dedicated towards the funds management, they will also ensure that there is a regular review and monitoring that happens for a portfolio. Most of the time we have seen that where we fail, or where most of the investors fail, is in the regular review and monitoring, that what one should do, whether what kind of exposure you should have to a particular sector, how much allocation you can do to any particular script or the stocks, what kind of companies should form part of the portfolio in terms of the corporate governance, in terms of the promoter holdings, in terms of the ethical practices that they have been following in past times, who are the people on the board of the directors of companies. So there are certain disciplinary hygiene, I could call it, as in the portfolio, that comes with the help of the professionals. Similarly, professionals also ensures that every company that they are invested into, there is a regular attendance of the quarterly meetings for those companies, interaction with the management, doing lot of channel checks. So certain factors or the edge, I would say, that Prabhudas Lilladher Portfolio Management Services offers vis-a-vis to the competitor is in terms of the strong market research and the channel checks. So before entering into any companies or taking an investment decisions into any stock, we would always ensure that a complete homework related to the companies or the stock is done at our end. At the same time, we will also ensure that we will go and meet the management of the company. We would do required channel checks, not only within the companies, but externally with their suppliers, with the other companies in the same sectors, with the peer groups, and a lot of other things. This helps as an edge of selecting the stocks, reviewing them, and consistently generating the returns. In our portfolio management services, we have always, in past so many years, have ensured that the discipline should be the core competence. Portfolios which we form generally are 15 to 16 companies. At the most, we try and not go about 20, depending on the market conditions. There is a very unique combination of, in our multi-cap fund, if I were to explain, a unique combination of large, mid, and small. So there is a strong, so in multi-cap, we normally try and follow the practice that bare minimum 25% of investment should be with the large cap companies, so that they provide stability to the portfolio. Similarly, in our small and mid-cap strategy, we would always see that small and mid-cap should form at least 35%. So small cap, mid-cap should form bare minimum 35% of our portfolios. So the quality of the companies are very, very important that we buy. Our channel checks are very strong. We rely a lot on our internal research and on our own. So we do have our own team also within the PMS, which does the due diligence before investing or before entering into any companies or the stocks. Obviously, as you all know, that Sandeep has joined recently in our PMS, and Sandeep is taking care of all major investment decisions at PL PMS, and he's responsible for the results of the funds. He comes with the 28 plus years of experience. And in all these years, he's been heading the various organizations at the different role. And with his help and support, he always ensures to take the informed decisions for all investors before investing into any companies. and also taking help from the various resources that we have within our organizations, and taking care of the portfolios and allowing them, because he has a rich background not only on the equity side but even on the investment banking side. So he comes with that mixed bag background where you do so many due diligence become the part of your processes and the systems in the last 27-28 years, which becomes a very good hygiene factor for any kind of portfolios. And he also ensures before investing into companies to reach out to in his capacity to the management, talking to them. So this comes with this added advantage which very few companies. So when you construct any portfolio, there are various aspects of the qualitative and quantitative construct that one should look at. And that is where we've always seen that he has a lot of emphasis not only in buying the companies but even holding them, because big money is made in the portfolio when you don't only identify the companies at the right time, but you also ensure riding it for real long time till the growth in the company remains. So it's not that you just buy the company and because you have made some kind of profit, you would exit from the company. But if your investment rationale are correct, if the company is delivering what you are expecting out of companies consistently quarter by quarter, and at the same time they are promising the future, then there is no need for one to look at or to exit from that particular company. And that's the advantage that our team brings in with such an years of hands-on experience that they have. Mm, in last generally in PMS is the advantage that we get. See, most of the time we do get a lot of queries from the investors saying that probably why should I look at portfolio management services, and why don't I look at the mutual fund also, which offers more or less same offerings, or maybe, and now too we get a lot of mutual fund which has a focus 25 or focus 35 kind of thing. Then why don't we look at such mutual fund instead of getting into the PM? Friends, always remember that in every cycle, there are certain sectors or the stocks which create some kind of alpha for you or provide some kind of facilities. In PMS, as a fund manager, one always has a discretion first that they can take a proper allocation to the sectors. Obviously, from the prudent risk management perspective, we also never go above 10% in a single stock at the time of investing. But nothing holds us of staying invested in that company, even post our investment, if the holding goes to 12%, 14%, 15%, merely because of the increase in the price. At the same time, in PMS, you get an added advantage that when you don't feel that the markets are not favorable or the global economy are going to the jitters, the kind of cash that one can create is an excellent added advantage. Second, there is an utmost transparency that you get in the portfolio management services, because all stocks are parked in your own demat account held by custodian. As we all know, as per the SEBI's new regulation, now it is mandatory that the custodians are required for all PMS or all PMS providers. So you have a custodian which is taking care of your securities. So from the safety perspective, now the portfolio managers are just for the decision taking on your portfolios, and they are managers to the funds. The investments and securities are held by the custodians, who are the professional entities. So we focus more towards our core competency that we have. In our PMS, we also provide an online login facility for all investors. So investors are free to log in whenever they want to, and then they can see the valuations of their portfolio. Also, at every month when they get their statements, they can also see their holdings. So on monthly basis, we provide the 5 kind of statement to every investor. First is an account performance statement. So account performance statement will help you to understand that what was your initial investment that you have made, what is the current value of your portfolio, what are the charges that were levied to you during that period, what returns you have made vis-a-vis to the benchmark, and how overall strategy return. So there are 3 parameters. You get your individual return, you get benchmark return, and at the same time you get an overall strategy return. So that is also very important for one to understand, that based on that whether their investments are doing in line with the investment concept of that particular strategy or not. Second, you get your transaction statement. In case if there is any transaction in that period, then a detailed transaction statement is provided to you with all information, name of the stocks that in which the transaction has happened, the price at which the transactions have happened. So it's a clear, transparent information. So you are completely aware about each and every transaction that takes place in your portfolio. Third, you get the holding statement. So holding statement provides you the detailed information, like first, what is a kind of sectors in which the investment is done, what is the percentage of allocation to each sector, what are the stocks within that sectors invested for you, what was the purchase value of that stock, what is the current valuation of that stock, and how much profit or loss, if any, you are making on that particular investment ideas. Third, you get a corporate action statement. See, friends, in portfolio management services, because the investments are made by portfolio manager on behalf of an investor, the dividend declared by the company is directly credited to the bank account of every investor. So for that matter, any corporate action, be it a dividend, split, bonus, rights, everything is very clearly provided or reflected in the statement for you to know that what was the corporate action taken in the companies in which you are invested in the portfolio management services. And also you get your corpus entry, which we always call it as a cash flow statement. So in case if you have any investment, then what kind of investments that you have made, any kind of withdrawals or the addition, then the detail of withdrawal and addition. As per the SEBI regulation, January 2020, now the minimum investment that one needs to make in the portfolio management services is 50 lakhs. So no investor is allowed to make any investment which is less than 50 lakhs in the portfolio management services. However, the top up post initial investments could be in tranche of in the multiple of 1 lakh or above. Also, this top up should be over and above the investments of 50 lakhs. So once you have given 50 lakhs as in your initial investment, and at any given point of time, if your asset management value is above 50 lakhs, you are free to provide any kind of top up. At the same time, you can withdraw your profit at any point of time from portfolio management services, keeping the minimum investments of 50 lakhs. So say, had you been invested in the month of April or May, when the market was severely corrected, and you decided to put money in the PMS, and PMS also invested your money into the market, as we all know that the markets have very, very sharp post April 2020. If you are making a handsome profit to the extent of 55-60% in less than 6 months, and if you decide that, okay, I would like to take some profit off the table, let me take that money back, you are always allowed to take that money back by keeping the minimum investments of 50 lakhs, which is required in the as per the regulations made by the SEBI. In every statement that you get on monthly, you would also get the clear-cut information about what are the charges that you have paid, what are the commissions that you have paid, what is the brokerage and other regulatory and statutory charges. That has also been explained to you in a detail in our PMS statements as and when. We provide a personalized services for all our investors. So there is a 24/7 dedicated help desk that we have, which is available even on the WhatsApp. You can just send a message and you will receive the call back from our team, and our team will support you in terms of whatever investment decisions that one would like to take. Now, coming back to our core investment philosophy, or coming back to our core investment thesis, let me assure one thing to all investors who are looking forward for the portfolio management services from Prabhudas Lilladher. Every company that we will have in our PMS, we can personally assure you that we would have a detailed understanding of those investments. And any given point of time, if investor wants to understand the rationales for which we have invested, can always get in touch with them, and we will be providing the detailed rationales to them, that why are we, what are our reasons for investing in this stock, and what are we looking forward in terms of the growth from that particular company. So we are backed by a very strong research, And that only helps us to stay away from our competitors or ahead of our competitors. We provide complete transparency in our PMS, which we believe that the transparency always leads to the long-term strong relationship and growth for every investors. In our PMS, you can always also do the SIP. Once you have invested for the 50 lakhs, you can look for an SIP at the regular interval. You can give us a mandate. We have an facility for direct debit from the bank account as well. So once you have done the initial investment of 50 lakhs, and if your investment is staying over and above 50 lakhs at any given point of time, you suppose as an investor, you decide that I would like to invest say 1 CR. But if you say that, okay, I don't want to make the investment of 1 crore at a stretch, can I do it a 50 lakhs, which is a minimum SEBI requirement to start with at one go, and the balance 50 lakhs, can I do a stagger investment in an SIP mode? You can definitely do that. You can either transfer the money at the regular interval as you decide to be, or you can give a mandate and the amount will be directly debited on that pre-decided date from your bank account. So this is an additional facility that we provide to all our investors for long-term and the consistent investment that they are looking forward. As you all know, that PL is in business for more than now 75 years. So in terms of the connect, technology, superior team, and at the same time consistency that you can always expect out of Prabhudas Lilladher Group, and that we would always stand by as a commitment from our PMSs. We have realized that there are a lot of requirement that every investor has, and based on that, we are definitely coming out with new innovative product. Not only the equity related, but other products also maybe sooner or later will be introduced from our PMS offerings, and that would help our investors to even the digress or the diversify that the strategy. Normally, I've always received a lot of questions from the investors that what if I would like to diversify my risk? Say, for example, as you have a multi-cap offering also, and you have a small and mid-cap offering also. If I want certain percentage of investment to be parked in a multi-cap and very and depending on the risk profiles, additional percentage within the 50 lakhs to be parked with a small and micro cap strategy, can I do that? Yes, friends, you are allowed to divide or segregate your funds between two strategy based on your risk profile. So if you were to choose that I want some percentage of my investment to be in a multi-cap portfolio, and the balance of my portfolios should be in small and micro cap, you can always do that. You are free and allowed at the time of investment. You can define that, or even later, even 1 year down the line or 2 year down the line, when you understand our investment philosophy and you would like to divide between or switch between the strategy, that is very, very easily available or possible. That would always be done. Normally, in portfolio management services, what we refrain or what we always tell our investors that we are not comfortable in doing is a very frequent entry and exit in the portfolios. So a lot of time we also get the request from our investors or the clients that why don't we look at booking some profit, because see friends, PMS is a long-term wealth creation product, and generally when you are convinced about the companies and you are convinced about their growth rate, then there is no need for one to frequently keep changing or keep exiting and entering from that particular stock. We are always approachable and accessible. So any given point of time, if you all have any questions or if you all have any requirement related to our PMSs, please feel free to write us. We would always assure certain things to you. First, that in our multi-cap strategy, there would be a proper allocation to the various market caps, that is to large, mid and small. At the same time, there will be a proper allocation to sectors, and there would be a proper review and monitoring of each and every company that we have in our portfolio. And in our small and mid-cap offering that we have at Prabhudas Lilladher, we can also take a bottom. See, in a small and mid cap, more than a sectoral allocation, what is required is of understanding the business model and understanding the companies, because you are buying the companies in early growth stage. So when you are investing in any company, when they are in early on their growth stage, you need to see the consistency of the business. You need to see the long-term survivability of the business. And at the same time, you need to see the growth prospect of that particular company. So in that phase, in our small cap and micro cap, we always prefer taking a bottoms up approach, taking a more informed investment decision rather than going on by sectors or investing into any particular company or going into any particular stock. So that is what our small and mid cap strategy would always offer, a bottoms up approach and more a stock specific strategy rather than a generic strategy in terms of completely backed by qualitative and quantitative factors, as I said, like channel checks and the due diligence and the hygiene factors, which we have a complete detailed presentation soon will be forwarded to each and every investors of ours, that we would like to explain that how we will be doing it in our PMSs. On the cost structure, one thing I would like to clarify that PMS is not a lock-in product. So every investor is free to decide his entry time. At the same time, he is also free to decide his time when he would like to exit from the portfolio. And that advantage that every our PMSs would offer. On the costing front, we have the various schemes of the costing available for an investors. So we do have a fixed fee structure, which is very similar to the industry or a mutual fund fee structure. Normally, our fees are charged on the quarterly basis at end of every quarter based on the average balance for that particular quarter. So if you decide for a fixed fee structure only, then in those fixed fee structure, the fees will be levied at end of every quarter. So in a year, you would be charged 4 times. And those structure are 2.5% fixed fee. Now this 2.5% fixed fee will be divided into 4 equal quarters. And based on those 4 equal quarters, whatever is the average balance of that particular quarter, that will be levied. Our second fee structure is a combination of fixed plus variable. So when I say the combination of fixed and the variable fee, the component of the fixed fee will get reduced from 2.5% to only 1.5%. And there would be an hurdle rate of 12%. Whatever return that we generate, net of all expenses that you have incurred in the portfolio management services, on the differential return, we charge 20% as a performance fee. So one structure is whereby irrespective of the return, you are paying only 2.5% annually to a portfolio manager. In the second structure, your upfront charges are, when I say upfront, I'll say the fixed management, because upfront charges are not allowed. We do not charge any setup fee in our PMSs. We do not pay any setup fee to any distributors also. So we have a trail model also, and that's what we charge to the investors, and that's what we pay to the distributors as well. So in fees in portfolio management services, when you select fixed plus performance fee structure, in a fixed and a performance fee structure, whenever in a year at end of 365th day, if we have delivered the return in excess of 12%, then only on those differential return, the 20% of performance fee is levied to you as an investor with a higher watermark principle. So this always helps or the works in the favor of investors, because the value at which you have paid the performance fee at next year, that becomes your base. And then again, the 12% on top of that, and then only on the differential amount of performance. So every year, if your performance is consistently improving, say, for example, at rate of 15%, just to assume, then that base next year becomes, so say, for example, if we start with an investment of 1 crore and 1 crore becomes 1 crore 20 lakhs at end of the year one, then for the second year, for the base of the calculation becomes your 120, and plus again you add 12% to that. So as an investor, you would always be at advantage that you are paying the performance fee only on the incremental amount, also at the higher valuations. So if there is no performance, then or if the return is below the 12% of the benchmark, then you don't need any kind of performance. The third fee structure that we offer, friends, is a completely variable fee structure. Now, generally, we offer this fee structure on a higher committed AUM. What does this completely variable fee structure stands for? Under this completely variable fee structure, we do not charge any fixed fee to the investors. The fixed management fee annually is zero. Investor will pay fund manager only if there is a performance in the portfolio, that too with the 8% of hurdle rate. So in a year, at end of 365th day, if the return delivered to an investor is over and above 8%, that on incremental return, 25% is a performance fee that is charged to the investor. Again, as I said, which comes with the high watermark principle, and 75% goes to the investor. So in this fee structure, as an investor, until and unless as a portfolio manager, if we are not making money for you, or if you are not getting the minimum return of 8%, then in that case, there is no fee that you need to pay to the portfolio manager. So this is we call it as a win-win situation for investor and a portfolio manager. Obviously, whenever we enroll any investor in completely variable fee structure, there is some amount of AUM commitment that we look forward, or there is a base AUM entry point that we look forward, depending on what is the comfort and the size of the investment that the investor is looking forward. So these are the cost related structures. So I have in detail explained you about what are the philosophies of our portfolio or the stock selections, what kind of strategies that we offer, what are our cost structures, custodian services are the custodies that we have, and other hygiene factor that we would always be. I'm not getting into too much detail or nitty-gritty, because that I personally believe that can be done during one-on-one call that any one of you have. We are always approachable and accessible. You can always send an email to us. As you all know, my email ID is nupurpatel@plindia.com, or you guys are free to please call me up whenever you want. My mobile number is 98210-97856. I'll repeat once again. My mobile number is 98210-97856. Please feel free to call me up for any queries or any discussion that you would like to have in detail about our offerings and the processes and the systems, because this being a Zoom call, we are keeping it a little bit generic, not getting into too much of technical details, but those every technical details can be explained or discussed during the call that you guys are can send us, or maybe you can send a written query, or you can even send a call to us. We will always provide a complete detailed login also to all investors. So every investor will get his individual back office login, and in his individual back office login, he will be getting entire information about his portfolio, all information about his investments, and all other information that he or she may require for his portfolio. Never to say that our PMS also takes care of year-end reports. So for every investor at end of the year, we will provide the completely audited long-term, short-term capital gain tax statement. At the same time, we would always be providing our investors with complete detail of not only the audited long-term statement, but at the same time, balance sheets and other information that is required for the income tax filing of the returns to be certified and by our auditors. So that's also one of an added advantage that you get in the portfolio management services, that at the year end, you get complete detail, compounded profit and loss, balance sheets, and other required information for your tax audit purposes. And that will be available in physical as well as in mail copy for all investors. So friends, these are certain general information that we have for our offerings at portfolio management services. now we would keep the floor open, because I wanted this to be a more of an interactive session whereby you all are free to ask the question to us in your Q&A board, and we would be more than happy to reply to your questions. So, moderator, I would like to keep the floor open for question and answer. Please ask questions if any. Okay, so we have few questions. I've just kept my video off because I'm reading questions on the screen. With the market, I think the first question is coming from Mr. Rajesh. With the market being where it is, how will you select the small caps and the mid caps? See, Mr. Rajesh, irrespective of the market, never see most of the time what everyone looks at or everyone believes that the price movement should make the decisions. That's not the correct way of looking at it. Market has always given the opportunity at every cycle, even in all phases. So whether it's a bull or a bear phase, we have always seen the winners coming up. So our selection for any company, be it a small cap or mid cap, is very simple and very clear. One, we give lot of emphasis to the management, that is the people at the top who's leading the company. That is first and foremost. Second, we also look at the promoter skin in the game. So what is the kind of holding that promoter has in his or her company? How comfortable are they? We look at that pledge stocks also. So there are a lot of hygienes that we follow, and at the same time the business model that they are approaching, and what are the growth of those business model in years to come. So based on that, only we make any kind of investment decision that we have. About charges, I've already mentioned to you. There's one more question, that your investment planning is at one go or staggered. See, the mandate. So the question is that whether if I get 50 lakhs today, will I park complete money on day one, or will I be doing the staggered investment? Always remember one thing, the mandate is to invest in equities and not remain in the cash. However, I would like to clarify that until and unless our investment committee is comfortable at the valuations, we would not go and invest just because we have a cash available with us. There will be a complete understanding that whether we would like to invest on a particular day if we feel the value, an intrinsic value that stock can offer. If we see that the stock doesn't have an intrinsic value, we will not go ahead and park money in the market. At the same time, if we believe that the stocks have reached to the target at which we would not even look at the market, and we would not be hesitant even to booking the profits. So our investment is purely based on the comfort that the company or the stocks would offer us, rather than a generic taking a call on the market. We never take the call on the market or indices or the Sensex. We would always do our due diligence. We will always understand our philosophy of investing, and that would be our core competency of investing into the companies or the stocks, which could be staggered. So sometimes you may also see that the complete construct of portfolio may take maybe even more than 1 month, 2 months also. And sometimes you may see that the investments is done, can be done in the shorter period also. But the overall idea is about at that day. So today when we get the money, the evaluation happens that does stock provide the enough opportunity from today in going period. What are the returns? The returns are available on our website. Any investors could please go and get those returns verified at our investment. How much return possible in a year? As a portfolio manager, which we are not supposed to guarantee any return for the investors, and we do not guarantee any returns because that is not allowed in any portfolio management services. But generally what we have seen is that equity as an asset class with the long-term perspective should say, I'm giving you a range and never quote this as a kind of guaranteed return, but a multi-cap strategy should moderately offer net of all expenses anything between 12 to 15% of return that one should look at with a time horizon of 5+ years. And in small cap strategy, I think so one should expect for fairly above 15 plus years of return with minimum 5+ years of time horizon of investments. So these are the returns, but definitely return would vary in the market cycle. Who had expected of any one of us that if an investor would have come in the month of April, May, would have made maybe around 55-60% return in less than 6-7 months. So our market always surprises us and gives us the more than what we expect, or even sometimes higher than our expectations. There are few more questions. I'll just take them. There are some specific questions related to some Rajesh Polypack and all from Mr. Bipin Parekh. Let me clarify that we do not give any target. We are a professional money manager. Our intention is to mitigate the risk. Our intention is to properly construct the portfolio, to have a diversification and the professional touch to the investments rather than getting into a stock specific. Is there any lock term for the investor? Mr. Siddharth, there is no lock-in period. पोर्टफोलियो मैनेजमेंट में एक्चुअली लॉक इन होता ही नहीं है. हम पैसे लॉक इन या कमिटमेंट पे नहीं ले जा सकते हैं. हमें पैसे ऑलवेज, इट्स एन ओपन एंडेड स्कीम. हाँ, वी ऑलवेज बिलीव, या हम चाहते हैं कि हमें लॉन्ग टर्म पैसे ही मिले. इसके लिए हम एग्जिट लोड रखते हैं हमारे पीएमएस में. सो फर्स्ट ईयर में अगर कोई 12 महीने के पहले निकलता है तो 3% एग्जिट लोड है. 12 महीने से 24 महीने के बीच में 2% एग्जिट लोड है, और 24 से 36 मंथ्स के बीच में 1% एग्जिट लोड है. 36 मंथ्स के बाद कोई भी एग्जिट लोड नहीं है. सो जनरली हमारा ऑलवेज व्यू यही रहता है कि हमें खुद पैसे लॉन्ग टर्म चाहिए, हमें शॉर्ट टर्म पैसे नहीं चाहिए. सो उसकी वजह से हम ऑलवेज कोशिश करते हैं कि हो सके तब तक लॉन्ग टर्म पैसा है, इसलिए एटलीस्ट अप टू 36 मंथ्स हमने कुछ एग्जिट. बट हाउएवर इन्वेस्टर अपने पैसे कभी भी ले जा सकते हैं, जब भी वो अपना रिडम्पशन रिक्वेस्ट देंगे. सो विद इन 7 वर्किंग डेज उनके बैंक अकाउंट में पैसे क्रेडिट भी हो जाते हैं. सो लॉक इन पीरियड नहीं है, और लॉक इन पीरियड हम चार्ज नहीं कर सकते हैं. सी आप पीएमएस को कभी भी जब एज एन इन्वेस्टर आप पीएमएस सिलेक्ट करते हैं, आपको ये देखना चाहिए कि देयर इज अ टीम ऑफ प्रोफेशनल्स who has a hands-on experience of managing money and who comes with the complete detailed understanding of the stocks and sectors. So generally, rather than taking an individual decision, it is more of a group decision that happens in the PMS, and that helps you. So there is an ideation of stock. आपको qualified institutional research analyst से आते हैं. At the same time, stock आते हैं आपको सेक्टर्स के एलोकेशंस आपको सीनियर सेक्टर एनालिस्ट आता है. प्रभुदास लीलाधर की इंस्टीट्यूशनल रिसर्च टीम में काफी सीनियर सेक्टर एनालिस्ट है जिनको 15-16 साल का एक्सपीरियंस है. सो दिस आर द पीपल हु आर द बैकबोन ऑफ आवर आइडिएशन, and then the investment decisions are taken by a very qualified people like Sandeep, who has 27-28 years of experience of managing the funds. So this is how the investment decisions are taken. In that case, 12 to 15% return. There's one more question that has come. In that case, 12 to 15% returns are not that good. In 5 years, maybe you can get more returns in other by good. See, investment returns, as I always said, you should look at the investment from, I would say, a cyclical or a cycle. Who had invested in an investor who must have come in maybe January 2018 or maybe in a similar period would have expected that they would have no return at all for 2 years, and then the return would come. So always remember one thing, that the returns should always be looked at as staggered. In a country where we have an fixed rate of return in the tune of 5.5% or 5%, if we getting a consistent return of 12 to 15% every year net of expenses, by far, by all means, are one of the best return. Never judge the return from the short term because market is rallied. As I said that the market has recently rallied, and the recent return for us and even Nifty are very, very lucrative. But you should look at from an investor perspective that if I'm investing in any product and the product is consistently giving me 12-15% return every year, should be a good product. Definitely it's a better product than any other, and equity has an inherited given that kind of return. In fact, our Nifty CAGR itself in the tune of 16-17%. So that's something that one would always offer, but there are whipsaws in between. So one need to look at it that there would never be a consistency in the return. Once in every 3 years, you would get a cycle which would be completely bare, and that time not only the return, but the investors would always look at the preservation of capital. And that's how one needs to construct the portfolio. You can never be a perpetual bull or bear when you are constructing the portfolios. We have one more question. See, what person a moderate return? If we take up the history of the capital market, we have always seen that the more than the return, that why you are giving 50 lakhs should be at 12%. That should not be looked at it, because in the bear phase you would say that even 7-8% is also enough for me. So I would always see the cycle with kind of experience that we have. It's always good as us as a money manager to give a correct picture to the investors and not to give them the rosy picture that, okay, sir, in equity, you will make 20%, you will make 25%, come this as a product. And what, see, any product sold on the base of the returns, believe me, you in a long term would always be dangerous, not only to the manufacturer, but even to the distributor and the investors. Product should never be sold on the base of only and only returns. Products should always be selected and invested based on the processes, based on the team, and based on the investment philosophy that that team has. Returns are the byproduct. Return would always be delivered if you are disciplined. Return would always come if you are consistent. Returns will always come if you stick to your core principle of investing. What professional do is not making a mistake. What an individual investor does, and the difference between an individual investor and professional is very simple, that professionals try to avoid making the mistakes, and in turn, in the long term, they win. So if you can, in a capital market, if you can just avoid and not make mistakes, you would automatically make money in that period. What is a revenue credit? So Ravi, probably revenue credit is always in the trade model as per SEBI regulation. You are feel free to call me up and we will help you, because we have a different structure for our team, and we have a different structure for our distributors. We have a different structure for our progress partners based on the potentials and the kind of money. So you can just call me up and I can take it an offline about, but obviously now SEBI regulation is very clear. Similar to a mutual fund, all credits in the PMS would always be on trail models. There's a question from someone saying that what if one invests into the FDs and what one invests into the equities? See, there is a complete different phenomena between the bank fixed deposits and the equities. I would personally suggest and recommend that investor having a risk appetite only should select the equity as an investment. Never ever select the equity as an investment if you do not have a risk taking appetite, because being in market for so many years, we ourselves have seen that there are great I would say periods when the investments are far more superior. So when we talk about FDs, as I said, and I've been giving an example right now also during that, look at an investor who must have put in, say, for example, 1 crore in the market on first week of April. That guy will be at least 55 to 60% in the money. Now, which bank would ever match this return? So don't judge the product based on the time frame. Judge the product based on your need, based on your risk appetite, and based on what you are going to derive from that particular product. There's one question from Mr. Amit that, sorry, I joined late. I missed this, hence reforming. What is a minimum entry for the PMS? So, Mr. Amit, I had explained this, but once again, I'll clarify that the minimum investment for the portfolio management services is 50 lakhs. Earlier it was 25 lakhs, but from 20th January 2020 onwards, as per new SEBI regulation, the minimum investment to start for the portfolio management services is bare minimum 25 lakhs. Sorry, 50 lakhs and not 25 lakhs. So earlier you are right, it was 25 lakhs, but now it has been enhanced by regulator to a 50 lakh. Friends, any other question that you would like to ask us, please feel free to ask. See, we are a process and system driven portfolio managers. We are more disciplined in our investment decisions. And we always do the regular monitoring and review of our PMSs. So that, or our investments that we have in our PMSs. As I said earlier, if you have any specific question, you all are free to send an email also to us at nupurpatel@plindia.com. At the same time, you can just lift your phone and can call me up on 98210 97856. I'll repeat the number again. It's 98210 97856. Please feel free to call me. We will be more than happy to answer your questions or your queries. If you have any other questions right now related to our processes, system, you can feel free to ask us, and we would be more than happy to answer. In case if there's no questions, then probably we can terminate the call in next 2 to 3 minutes. I hope there are no further questions. We really thank you everyone for your time. We are looking forward to your participation. Please do contribute towards our portfolio management services, and we ensure the personalized service. We ensure the great, robust quality of the portfolio that we will build for you over the period of time. And in a long run, we can assure you that you would always be comfortable with the kind of services and the construct of the portfolio that we offer as a professionals in the Prabhudas Lilladher portfolio management services. Once again, thank you everyone for your valued time and looking forward. In fact, I would personally believe that at such market level, you should always look at hiring a professional services, because they don't only invest, but they also help you in mitigating the risk, which is very, very important in investing. Thank you, everyone. Once again, thanks a lot. Thank you. Moderator, we can end the meeting. Thank you.